Bonjour. Cher Augustin, cher Arnaud, dear friends, it's my great pleasure to be again with you today for Europlace. You maintained our dialogue through these crises, and we lived through several of them, and they are not over. And in light of the current geopolitical context, the theme of this session, this year, appears particularly relevant. European strategic economy is not absent, I'm sure you are convinced of that, is not absent from our side as central banks. We notably ensure that our banking system remains robust in times of great uncertainty, namely the war in Ukraine and its economic consequences, the spur in inflation, the deterioration of the macroeconomic outlook, and yes, the normalization of interest rates. In this context, let me first pay tribute to the solidity and performance of the French banking system here in Paris. French banks' core equity tier 1 amounts to 14.9% at the end of the first quarter, while their return on equity increased over a rolling 12-month period at 7.6% in Q1. May I add that in our view, and I know there is a growing discussion about that, in our view, corporate risks remains without any doubt manageable. However, this collective strength should not mean any complacency, especially in the face of the triple digital revolution unfolding in the financial sector. New tokenized assets, new players, and new decentralized market infrastructures. Against this background, central banks are increasingly considering the creation of a digital form of their currencies. And this will be my focus today. Let us face it, this idea sometimes raises doubts and even fears among commercial banks. The part of the project which is quasi-consensual, with strong use cases, is the one which raises little public interest, namely wholesale CBDC. I will come back to this later. But let me start with the other face of the CBDC mountain, retail CBDC. This one, by contrast, is the focus of both public excitement and private questions. Let me suggest, for this phase of the mountain, 3 hopefully shared principles to climb together. Principle number 1, our means of payments are and must remain a partnership between central bank money and commercial bank money. Until now, the partnership, and I use these strong words, the partnership between central bank and commercial bank money has structured the retail payment landscape, and it has preserved the stability of our monetary system. Their respective roles are clearly assigned. Central bank money anchors the stability of the financial system, while the multiplicity of issuers of commercial bank money preserves competition and innovation. Their interplay and their interchangeability at par value ensures the safety and efficiency of the monetary and financial system. Neither one is better than the other. But in a joint venture, and it is a joint venture, each partner needs the other. Let me be more explicit. A digital euro should never mean disappearance of commercial bank money. And conversely, digitalization cannot mean the disappearance of central bank money. But indeed, these foundations, and especially the role of central bank money, are increasingly threatened by the digital revolution of the financial sector. First, this revolution results in the decline in the use of cash in transactions, which calls into question the availability of central bank money for the broad public. Increased reliance on digital payment solutions also shows how our European ecosystem, we speak today of European strategic economy, how our ecosystem has become critically dependent on non-European players, e.g. international card schemes and big techs. Meanwhile, the emergence of crypto assets and so-called quote-unquote stable coins may compete against both commercial and central bank money. Even though these cryptos do not offer the same guarantees in terms of credit risk and safety. Look at the recent collapse of the Terra Luna ecosystems or the sudden liquidity shortage of Celsius network. They are necessary wake-up calls. And I strongly welcome here, on the last days of a fruitful French presidency of the EU, the successful trilogues on both TFR, the so-called travel rule against money laundering, and MiCA market in crypto assets. I come now to my principle number 2. Even if the precise use cases are not yet definitively fixed, there are several material reasons to consider the issuance of a digital euro. The main rationale is to preserve the role of public money in a digital economy. Such means of payments, adapted to the demand of users in the digital age, would first preserve the accessibility and usability of central bank money. Second, support our monetary sovereignty and limit the risks that, quote-unquote, external digital assets, be they cryptos or non-European CBDC, would be used as settlement assets in the euro area. And third, support the strategic autonomy of the European continent and hopefully contribute to the emergence of a pan-European payment solution. In the light of these three challenges, and under the leadership of my colleague Fabio Panetta, the Eurosystem wisely decided on a 2-year investigation phase on the issuance of a digital euro. I don't say it's done yet, but it is our strategic and, yes, sovereign responsibility as central bank to study the issue seriously and then to decide by the end of 23, early 24. I would hence suggest in our discussion we don't focus too much on the why question, but rather on the how question together. And here I come to my principle number 3. Our possible future digital euro must be designed and developed all together and be as decentralized as possible. And I stress this word, decentralized. I said it here last year. With this precise wording, a CBDC will be created with banks, not against them, nor in spite of them. I don't have, 1 year later, any word to change to this commitment. But let me be more specific 1 year later. First, I strongly encourage all financial intermediaries to actively participate in the dialogue the Eurosystem has established, both at the European level and at the national level. I am pleased to announce to you that we just decided to set up a CBDC working group within our French payment committees, the so-called CNPS, Comité National des Paiements Scripturaux. The Eurosystem, on its side, is currently looking at the possible scope and design of a digital euro. Let me just share at this stage my personal thoughts about the general framework that should see light. In my opinion, similarly to the current intermediation model, as many functions as possible should be delegated to intermediary. Obviously, some functions should remain the exclusive privilege of the Eurosystem because they are at the core of its mandate and cannot, by definition, be outsourced. This is the case specifically for the issuance of a potential digital euro. But the Eurosystem should entrust banks with the distribution of digital euros to final users, while setting technical, functional, and commercial rules, like, for example, the branding, logo, and fee structure. But we would then build on the experience of intermediaries to offer means of payment to end users and to develop value-added services. The Eurosystem could also outsource part of the settlements, such as recording or validation, to intermediaries. Moreover, it is clear for me that some functions should remain under the sole responsibility of intermediaries. In particular, I believe that the Eurosystem should not have the role of managing digital euro holdings. Let me give a very precise example in our own history. The Banque de France closed its last private customer accounts over 20 years ago and does not intend to reopen any. Customer relationship management is best handled by financial intermediaries with their experience in this field. They would also ensure compliance with the regulatory requirements, including KYC and AML. Such a design would allow intermediaries to preserve their role in the retail payment system and would ensure the high level of privacy strongly required by the public. Finally, and this is a frequently asked question, regarding the possible risks of banks' deposit conversions, we must and will ensure that a digital euro remains a means of payment rather than a saving or investment asset. This could be achieved quite simply by capping the maximum amount of digital euro in circulation at a low enough level. Let me also stress this word. It raises a question of control, but let me quote a completely other field, regulating savings, where we have some French expertise. Ceilings for the livret A have proven an efficient tool without requiring the intervention of a big brother to check on them. I come now to the second face of the mountain on a wholesale CBDC. By comparison, this topic is less contentious and of less concerns to stakeholders. But it should not be perceived as less important, which is perhaps sometimes the case. We central banks, and especially the Banque de France, have been very proactive here, as demonstrated by the wholesale CBDC focus of the BIS innovation hubs. The Banque de France is at the forefront here, and we have especially identified two critical use cases for improving the payment ecosystem with the wholesale CBDC. First, the tokenization of securities. A wholesale CBDC could be used for the settlement of such securities issued on DLT, distributed ledger technology. This technology also streamlines the information flows in financial markets from trading to exchange procedures and settlement. Second purpose, a wholesale CBDC could enhance cross-border and cross-currency settlement and is absolutely key in the interoperability of future retail CBDCs. Over the past year, the Banque de France has successfully completed the first phase of our experimentation program, comprising 9 experiments, hand in hand with the private sector, including many of you, and with other public actors. Thanks to these experiments, where are we? And let me also try to be precise and short today. We have developed a direct technical expertise, including 2 key innovative assets born in the Banque de France. A proprietary DLT technology called DL3S. This blockchain has been entirely designed by us in order to meet the needs and expectations of market participants as a permissional blockchain with efficient delivery and settlement services using CBDC. Second key asset, an automated market maker, AMM platform. It's inspired from the DeFi markets, and it could serve as the basis of, remember what I said about cross-border and cross-currencies, the basis of a multi-CBDC platform where different central banks come together to enable fast, automated, and transparent settlement across currencies. I announced this morning that we engage the second phase of our experimentations program with 4 or 5 additional experiments starting this semester. We want to get closer to a viable prototype, testing it in practice with more private actors and more foreign central banks in the second half of this year and next year. This work ensures, and this is absolutely key, that we stand ready to bring central banks' money as a settlement asset as early as next year, with the implementation of the European pilot regime, which is a favorable legal framework. This pilot regime offers a regulatory framework to support the financial asset tokenization trend. Finally, these experiments conducted by the Banque de France contribute directly to the Eurosystem's existing task force and to the future Governing Council decision about wholesale CBDC on improving our services in the wholesale market. Last point about wholesale. There is the key outstanding issue of the articulation of the wholesale CBDC with existing market infrastructures, such as target services in Europe. Both must be made interoperable. And there are 2 reasons for that. On the one hand, DLT are still not mature enough to handle large volume of transactions, and therefore will not replace conventional systems soon. They will rather complement them. Centralized and distributed systems will thus have to coexist securely and efficiently. On the other hand, we must make, and let me stress it, we must make a CBDC available on these infrastructures to match market demand for tokens so that our settlement asset is not substituted by private assets, which would be riskier and which would be a regression of what we have built together for decades. I come to my conclusion. The 2 projects of a retail and wholesale CBDC are 2 faces of the same mountain, which is the ambition to offer a digital form of central bank money. The ambition, to say it in other words, to combine innovation and trust in the payment system. I spoke at the start about another partnership, an existential one, between central banks and commercial banks. The trust-innovation nexus I conclude with is just as existential. It does not entirely coincide with the former, public-private. Commercial banks can rightfully inspire confidence. Central banks are, yes, capable of innovation. The CBDC is proof of that. But one thing is for sure. It is together that we can succeed in strengthening Europe's strategic economy. Thank you very much for your attention.
Thank you very much, Mr. Governor, for this very strong presentation. First, the solidity of the banking sector in France, and no doubt on the capacity to continue to financing corporates and the low risk on the corporates lending. And second, the way the central bank is participating to the innovation and to the digitalization of the euro. which is a very important task on European level, and Marcel Hag is here to testify. So congratulations, and the need to bring this digitalization in the relationship between central banks and the commercial banks and the financing system. As Paris Europlace, we are contributing to this works, both on the analysis of the users' cases, as well as the contribution to the European consultations on the regulation, both MiCA and the digital euro. Thank you very much, and congratulations, Mr. Governor. You didn't mention the strong action of the central bank in terms of sustainable finance and the way Governor François Villeroy de Galhau has contributed to the NGFS network, the network of the central banks, international, to participate to sustainable finance. And now, the best moment of the day, the lunch. So you have to go to the exit and go to your tables. And we meet again at 2:30, very precisely, for the afternoon session. Thank you very much.